Welcome to the Tesla Economist. Please hit the thumbs up and remember to subscribe. You can follow me on Twitter and talk to me on Patreon. I think that enough was said on the earnings call that we could gather some more targets as to where things might be with the company, probably by around sometime next year, probably more to the end of the year. I think we can use these targets and try and establish a valuation for Tesla when it reaches this stage. To be clear, I'm creating numbers of production that I've best inferred from what we heard on the earnings call. I'm taking these numbers and assigning a date as to when it sounds like Tesla have reached these numbers. I feel like the end of next year should be enough time to reach the production figures we were told, along with all target dates. We'll also not be including any new fabs that might have been built by this stage, so we're placing a valuation for Tesla at the end of 2023 based on the run rates at which we were told on this earnings call. We were told that the Model Y should be ramped up sometime next year at a rate of 1 every 45 seconds. We're looking at around 600,000 a year, including some downtime. Elon also said the Cybertruck could be at volume production being about 5,000 units a week or around 250,000 units a year. Wow, that would mean my Cybertruck is likely ready in 2024. Seems too good to be true, although I'd have to move to the US to receive it. Could be worth it though. Now, of course, the Cybertruck will likely require more cells in the battery pack, but either way, we should expect Tesla to reach these rates of production according to the earnings call. And my point is, the factory should hopefully be capable of producing enough cells for that many vehicles. And Elon seems fairly confident that it would be by the latest of Q1 2023. But Elon has recently talked about 100 gigawatt hours a year with this factory. In the recent interview with Chris Anderson, Elon was asked, in regards to Texas, is that the goal here, to eventually produce 100 gigawatt hours of batteries here a year, eventually? To which Elon replied, we will probably do more than that, but yes, hopefully we will get there within a couple of years. So that number of cells produced would align in closely with that number of vehicles produced, despite us being told that we'll hit a run rate of 100 gigawatt hours by the end of this year in our last Q3 earnings call. We really need to see evidence of that line running at that speed. I doubt the market will react that fast to it either until they see it in the financials, which is why I'm planning on leveraging my position before that's the case. So 100 gigawatt hours a year run rate for the 4680 line seems to be the magical barrier to the next stock price level. Although that's just Texas. Remember, we have a 4680 battery in Berlin too, and Elon confirmed that they're moving over to 4680 cells in Berlin towards the end of this year, which I think is a really good sign, if it happens at least. I'm hoping once they solve the issues with their 4680 line, it will be a matter of just copying and pasting these lines with a lot more ease, and this is the part of the magic we're waiting for in the exponentials. Elon also indicated that China can still ramp quite a bit faster, and if we exclude any new fabs in this model, as that was not mentioned on the call, then I think I'm still being conservative at 1 million a year run rate for Shanghai, and Fremont perhaps at a run rate of 700,000 by the end of 2023. Anyway, if we total all those factories up, we'd be a run rate of 3 million vehicles a year by, say, around the end of 2023. Well, how about we work out what the last quarter of 2023 would be in deliveries by taking a quarter of the 3 million run rate, and that gives us 750,000 vehicle deliveries. We actually can work out pretty close as to what all these margins will be and prices, at least in today's money. From there, we can get a pretty good idea of net income, and we can assign a valuation to the company from there. I've decided to break down where I see the models produced from each factory according to what we'd been told. For ASPs, I'm going to use the existing prices we have today. If the prices have adjusted by this time, then it should mainly be due to adjusting for inflation, and thus the profit we see should be about relatively the same in real values. The main point is that Tesla are able to raise their prices to adjust for inflation and still have enough demand to sell every vehicle they produce. Of course, if things did get so bad that demand actually started to drop, Tesla also has these huge margins they can use as a buffer to reduce prices if necessary to meet demand and still make a great profit, whilst it becoming exceedingly more difficult for any competition. I do have to guess the Cybertruck ASP, but I think 65,000 will likely be close. Of course, Tesla may start only selling quad motor version to start with, and it may cost $90,000 or something, and I'm sure there'll still be people queuing up to buy it. But I would say it would saturate to around $65,000 before long at a more realistic average price, giving us a total average selling price of all vehicles of $59,000. This is to be expected with all the price rises we're factoring in, and the main increase in supply being more Model Ys and the higher priced Cybertruck. In this model, I'm going to include the gross margin I expect from each model from each factory. Now, bear in mind, this does include the recent price rises, so we should see some improved margin just from that. Then of course the new factories should be producing vehicles at a much improved margin, using 4680 cells, front and rear castings, and structural battery packs. Remember, these are margins just for the vehicles themselves. It excludes FSD and regulatory credits, unlike the margins we're shown by Tesla. I haven't done a valuation like this before, but if I didn't do it this way, then the average gross margin would have just been a bit of a guessing game. I think this will probably be our most accurate shot, and it comes in at a total of 34.1% average margin. Alright, this gives us a total auto revenue of $45 billion. Then FSD around $760 million, assuming no major advances by this stage. And sure, let's keep regulatory credits going. I don't think they're going away that soon. I think Legacy are still going to be struggling and need to purchase these credits. So let's add $250 million in there for good measure, although they are starting to look minuscule against auto revenue. When we total them all up, we get $46 billion in revenue and $16 billion in gross profit, which works out to be a margin of 35.6%. Considering the 33% margin we just saw in Q1, this margin doesn't seem too bullish. In fact, I could understand if some of you would place it higher. The other sides of the business are still inconsequential at this stage. It would be likely they've grown somewhat, but are still probably floating around break-even, or any profit they're now generating is quickly dwarfed by the auto revenue figure that has grown significantly. So we won't go into too much detail in the other parts of the business. For OPEX, we could increase R&D, but we should expect something back for that. If more is being spent in R&D, it is likely due to further improvements in FSD, which should also increase profits. And if we've cracked FSD by this stage, which it sounds likely according to Elon, then we should expect that to be reflected in the PE ratio somewhat too. I'm going to increase R&D as to what I expect it might have risen to by this stage, to $1 billion. SG&A has probably grown a bit too, so I'll place $1.5 billion in there. We're trying to establish an overall company valuation here, not just the auto business, so we do need to include it all. That comes to an operating income of $14 billion, or an insane 29% operating margin. After tax, we're looking at $12 billion net income, or about $50 billion annualized. That is a significant amount of profit. It's huge. And coming from about $3.3 billion in Q1, then we're up nearly 4 times on earnings over a period of 18 months. Alright, but we need to place a valuation on it for the whole company. If we are at this stage, Tesla has proven their ability to ramp 4680 production, which means they can get on with growing the company by building more machines that make the machines. We should have a new fab operational in Shanghai by this stage. I would also expect a new fab to be up in Berlin, or if not close. On top of that, we were told there'll be a new location announced sometime for another gigafactory, which may also be nearly complete. We should have seen some major breakthroughs with FSD, a humanoid bot reveal, a dedicated robotaxi reveal, hopefully an in-house LFP day, along with more progress in the 4680 technology and chemistry. We should have semi-truck and roadster released. The fact the Cybertruck is also out in this scenario will change a lot of doubters' minds as well. In other words, we have to factor in the state of the company and how the market is viewing it, assuming these things that Tesla have said will come into fruition. It would give a lot more confidence to the future of this company overall for investors. Trying to be realistic here, I think a PE ratio of 80 is highly possible if FSD has been reached, the level Elon is saying, and the other events were a success. If the other events and FSD were not doing so well, then we could possibly go as low as 50. I think overall though, I would like to give a PE ratio of 60. Even if it was only an auto business, if they accomplished this, it wouldn't take too much to double production over the next few years, with even more efficient factories and likely tripling net income again. I think this revenue and profit is probably fairly accurate. The valuation given will depend on how much of what we're promised has eventuated. Therefore, I'm placing a $3,000 stock price target if Tesla achieve what they said they would on the earnings call. So just to be clear again, this is not my price target for 2023. This is me trying to interpret what was said on the earnings call as to the level of production they expect around this sort of time. If anything, I'm probably giving them an additional buffer here in getting the battery production ramped up. It sounds like it should be earlier than that. By the same token, no one knows this company better than Elon, and these are pretty much his estimates. I'm just trying to assign a company valuation onto it to give us some clarity. And still, the most important element to keep an eye on is the 4680 production ramp. You can download this spreadsheet in some of my Patreon memberships too. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.